Hi there, traders, and welcome to Trade the Structure. Just going to go over the overnight markets coming into the Asian session today. Just see what happened in the US and what happened with our key markets. You'll see on the right-hand side of the screen there that I keep an eye on just to get a broader macro picture of the, what to expect of the overall action. So pretty much last night was drove the markets down, or in US indices at least, was the same sort of scenario with regards to inflation and rate rises. So obviously the market is now getting more concerned about a faster rate rise scenario than what they were led to believe coming into the end of last year. So bonds, obviously this year, we spoke about this yesterday, bonds are ticking down, which means yields are going up. So that's trying to factor in certain rate rises this year. I think they're looking at about 4 rate rises this year in the US, which is a bit more pressure than what they thought. And you can see that in the NASDAQ. NASDAQ's getting sold off a bit lately. So it's still, there's a lot of people around hanging around with the same mentality, buy the dip, buy the dip. But this dip hasn't finished just yet. And we're just going to see what levels it could go to. So we'll start off with, this is the S&P. We're looking at just a short-term 30-minute charts, which is just for basically the overnight action. We'll just see what bigger levels play out to. So you can see it opened up at 1:30 in the morning. That's Sydney time. Pressure down. It was sort of contained. It was sort of bouncing, trying to bounce a bit. Sorry, the wrong time there. Trying to bounce a bit here, and then later on, just held that lower high, and then more pressure coming to the late hours of the market, and pressured the S&P, big S&P, down into the close. And I think that was more dragged down by the NASDAQ. We'll look at the NASDAQ now. You'll see NASDAQ. Let's just get rid of that. Now, NASDAQ there, same sort of thing. So mirroring the S&P. So the S&P, obviously, with the NASDAQ, your fangs driving the market lower, pretty much weighing on the NASDAQ, which weighs on the S&P. Even though it's 500 stocks, there's only a handful of them really doing any damage. You can see the market's obviously opened down, pressed down. You got a bit of a bounce from bargain hunters. That secondary lower high, which is sort of the key one. If you're trading that overnight, that's the one you'll be looking for. So if it fails to get back up to the highs, then there's some more selling lingering and there's more pressure to potentially come. And that's where you want to be entering into some lower highs into shorts. And vice versa for longs. This sort of entry, when you got the market pressing down, popping up, and pulling back on the second time around, it couldn't get to the previous low, and it starts to show some buying. That's where you want to be getting long off the shoulders. Okay, so that's still a longer term pressure. If we look at the NASDAQ longer term, it's still in that channel, longer term channel. So that's just where people might be bargain hunting into here, into some of these lows. If you can see, let me just get that up there. Some of these lows through here, they might be looking to bargain hunt, or just a bit higher really, but maybe a flush and then a bounce. But we'll just have to wait and see. It's not happening just yet. Otherwise, this market starts to capitulate. It's heading down to this level 14,450. So it's all about whether it's that same buy the dip mentality is going to hang around and keeping that longer term uptrend. Dow is down nearly 400 points, and you can see it's consolidated through here and then pressed down to the close. So that really opens up a move down to these lows in 34,700. So what's that? Another 300 points down or so, or even open up a bit lower. Okay, so this is the sort of concern you've got through those highs up there. Punch through the highs, failed, so that suckered in some buyers, and then turn around and squeeze them back out. So you've got this retest and lower high in here. That's where you'd want to be looking for shorts. Okay, once it starts to retest, fails, you've got basically a double top. We call it a retest fail, and then comes straight back down. So now you're looking into these lows just to see what happens. Okay, whether we get all the way back down here, you've got a number of sort of levels where you've got to keep an eye out for. First one being that 34,700 level. Okay, DAX Europe was actually up because a bit of bargain hunting into Europe. You can see that's open lower, and then pretty much it was all one-way action up until the US started to fail. Okay, and then they closed earlier, obviously. They closed at 3:30, so 2 hours after the US Open, and they'll probably more than likely open down because they didn't see the brunt of the selling into the close in the US. So you would expect another gap down. It's just whether or not there can be some bargain hunting and buying on the open again, or whether these fears are going to keep driving this market lower. Okay, FTSE, a lot better. We've just failed off this high here, so that'll be interesting to see whether they can, it's probably going to gap down on the open as well, and then see if it can ramp back up to that high, see if it holds these inside levels. The good thing is it actually held just in here, which was on the FTSE about 75.29. So we'll see. We'll see. That's looking a bit more positive. Still on an uptrend. It's just whether these dips are going to get soaked up again. Okay, this is the ASX. ASX to me is looking more bearish than anything else. Okay, we had this longer term uptrend here. We hold this level at 74.85 and we started to head south, so we're holding lower highs now. So this is what I'm expecting to push down to 71.92, and we're short on this, short from yesterday. It's a wider stop, a bigger approach, more a daily perspective to it, because I do feel that there's going to be some unwinding of some long share positions of bonds. Now we're looking at US interest rates rising, which means there's more appeal for the bigger funds and stuff to start to buy into bonds, buying the physical, because of the yield, in anticipation that there's going to be some pressure into a bit of an unwind in some stock positions. Okay, so that's what I'm anticipating. I just feel the ASX or the SPY. You can trade it on the SPY. You can trade the CFD. We trade the CFD on it through Trade Direct. So you can have a look at that. And there's this major double top up here. Failed. Got lower highs come to play. So I'm looking for that offer to bid move. Bid move being 71.83. Okay, we'll see how that goes. Dollar index. Now the dollar index looks like it's getting buoyed up here for year again. We had this big flush through Christmas. I think it was Christmas. No, the start of the year. Big flush down into this zone here, 94.60. I think that's just because you saw a lot of action through here doing nothing. Chopping around. Big flush out. Not much is happening. We had a bit of a bounce back. That's lower volatility and lower. What am I looking for? The word. Lower action as market runs away on holidays. Low liquidity, that's the one. So low liquidity in this period, easy to flush down, bounce straight back up again, and it looks like it's going to hold this zone around 95.60 now and start to work its way up as bond yields continue to rally. And that obviously that pressure up is going to probably put more pressure downside onto the euro. So the euro potentially is a good shorting opportunity around here with your risk just above 113.60. The pound, looking for that to pressure down. You've got the lower high coming to play here. So if this lower high is correct and we're good, we're going to get a good bounce on that dollar. You'd be looking for a test back into 35.73 or even lower. Okay, then you start looking left to see what levels come up here. Okay, Aussie failed to get up through that 72.28 or 72.30, punched up through, held that lower high. So it's just whether it can press back into this zone in here, 71.86. That to me depends a lot more on the on what's going to happen on the US dollar. The US dollar doesn't do too much. It actually doesn't look like it could hold this high low and punch back up. But for now, on the 30-minute chart, if you're trading that intraday, that's the key for me. It might bounce back up to somewhere in 72.16, 20, and then get a lower high and press a lower. US yen doesn't look too bad in here. I would expect this zone to hold, especially if the US dollar starts to bounce up, and then that's a sort of break up and through, out of that action there. Sort of looking for that press high. So if we get up through, was it 114.55 or so, and then we start to hold a higher low on the lower term timeframes, then that could press up through this high 115.05 and into this zone up here. Okay, just see how that plays out. Now gold, we're looking at this for quite a while. Gold was grinding down. We're looking at it through that 1830 area, 1832. I had it alerted at through these highs, and that's off a longer term perspective. You can see these highs through here. Okay, 1832, get up through there. There's going to be a lot of stops from not just this congestion through here, but through these levels too. There's going to be a lot of stops placed above there, longer term. The way it was moving through here, it kept getting smacked down, soaked up, smacked down, soaked up, and this most recently did, as buyers defended the 1800, 1810 level, so 1805, 1810 level, then that was a good sign. Once we started punching up through here, you got this little high low. That was a key. Okay, that was a key, and then there's going to be a lot of stops, sellers in here that are getting trapped, getting squeezed out, and the market squeezed out, and there was enough to get it through that 1830 area. For now, I would expect that's a bit extended. I would expect a bit of profit taking from these buyers, maybe a bit of a grind lower, and then we want to see what happens when we get back to around this 1830, 1832 area, see if we can retest, hold, and go again. Okay, longer term. Crude oil. Oil is, in a decent uptrend on the 30-minute chart. Bit of a flush through this highs, which is not so good if you're looking at that. You'd rather see it extend through the highs. When you just flush through the highs, that kind of action, that's not something you really want to see if you're loaded long. Obviously you're going to be looking at the longer term trend, but just at shorter term, maybe we get a bit of this is expansion up. Maybe we get a bit of a contraction, a bit of a pullback, a bit on a larger scale, something like this. if you can see what I'm talking about. So it may be that it's just got to clear out something like this, clear out a few longs on a longer term before we start building again. Okay, we just have to wait and see that. But still, that chart there, the 30-minute even, is looking quite nice. If this zone holds through 85.10, it could easily bounce, consolidate sideways, and then go again. Okay. Copper, I was looking for this to retest and hold a higher low off this zone here, 448, 450, thereabouts. I was looking for that to maybe flush in, bounce straight back and hold a higher level, but it didn't. It went straight through it, and then it's been consolidating through here, chopping around through here. Now, I'd ideally be looking for this kind of thing. We can reclaim that level and push back up. Okay. We'll just have to wait and see. I think longer term, it's looking pretty good. You've got this zone through here held, another zone through higher level holding. It's a lot difficult. It's not just a straight up trend. It's going to be some whipsaws as well. So you're going to get the extensions higher, and then obviously we've got the deeper correction there. Extensions higher. You got to see the corrections, a deeper correction, flushing out a few more buyers, and then resetting and going again and squeezing them out again. Okay. Bonds. We'll just keep an eye on bonds. Short-term bonds. We'll just go through the yield curve here. Short-term, mid-term, long-term. Short-term for the 2 years on the US, holding through this zone, which is quite interesting. It's sort of pushed up, and then more selling into the US close. So pretty much it is popping up right through Asian and European trade before it started holding again. And you can see, actually, that was before that. So that was about the US Open, and just retested these highs and failed again. So there's still some lingering buying into the yields or selling into the bonds as they still expecting this inflation or rate rises to be a concern for the market. Okay, so for now, still on a downtrend. Look at the 10 years. US 10 years, same sort of thing. We had this bit of a bounce here, retest this level. So if it chops around below that level for too long, it's going to head south and it's going to trade to the next level on the downside. So still same sort of pressure. In the longer term, 30 years, same sort of scenario. We've got a bit of a pop, squeeze out some of these sellers, pop, and it's dropping now. So we just have to wait and see whether it's just going to do something like that or whether it's going to start to get soaked up, something like that. Okay. All right, that's pretty much it, guys. Hope you enjoyed that. If you did, leave us a like, be much appreciated. And remember to take a look at the website, tradethestructure.com. All right, guys, enjoy. We'll speak to you soon.